All right, here we go. Couple things we got coming up, right? Chapter 10, obviously you get into some stuff there that we got to take a look at. I'm going to show you a couple things there that'll kind of also ease us into Project 2. And I made your you've already had one assignment, which is choose a company, but I've made another assignment due this Friday, which is called ticker symbol. You guys have already looked up the ticker symbol for your company, so you've already done a little bit of that work, but there's about 3 other questions you're going to have to answer, okay, when it comes to that. And I'm going to show you one great site that you can go to. It should take you, literally, it should take you less than 5 minutes to complete this assignment, right, and get it submitted and everything. So it's not too big of a deal, and at the same time, I can kind of do that, and I can talk a little bit about bonds, and that's what I'm going to start with, because that's what a lot of your assignment for Chapter 10 is. It's about valuing bonds. Here's the important thing. I'm going to give you a couple of important things. One is yields and prices of bonds are always inverse. Okay, remember that. Write that down. Think about it constantly when you're doing your assignment. Yields and prices of bonds are always inverse. Okay. By that I mean we're talking about the secondary market of trading bonds. Okay, if Microsoft issues bonds, and even though Microsoft has lots of cash, they actually do issue some bonds. Okay, that's me lending Microsoft some money if I buy one of those bonds, right? And let's say I buy one of those bonds and they issue it for 20 years at 3% interest. Just to throw out an example. Okay, I own that bond. Am I stuck with that bond for 20 years? No. I can negotiate that, or I can sell that in the marketplace on any given moment, right? Just like a secure or equity. I can sell that thing. I can call my broker and say I want to sell that. Boom, he'll have it sold within seconds, literally. Okay, if I want it to go that fast. So what do I mean then? Okay, that 3% on that bond is always going to stay. That bond is always going to pay out 3%. Okay, 3% based on the original purchase amount. Generally about $10,000. Some of them are $1,000, but $10,000 kind of seems to be the norm anymore. So what happens then? Well, let's say rates have gone down in the marketplace, meaning that if Microsoft were to issue that bond today, it might only pay 2.5%. And Luke wants to buy this 3% bond from me. Okay. Now, if Luke wanted to buy a bond from Microsoft today for $10,000, he'd only get 2.5%, right? So am I going to sell him my 3% bond for $10,000? Heck no. I want to get a little bit more for it then, right? Okay. Luke's going to have to pay me 10.5 or something like that. Okay. That's a lot of the stuff that you guys are going to be doing looking at the assignment here for Chapter 10. And so it's important to keep that in mind so you know which way you're going, so that when you get your answer, geez, yields went down, okay, price should be up, right? So this should be more than what the original amount was, okay? So keep those in mind as you're going through that. Also, just keep in mind, and this is true of all assignments, and you guys have done a pretty good job with assignments so far, but keep in mind that, the rule of just rational numbers, if you want to call it that, meaning that, take a look at your problem and say, yeah, let's see, is that bond going to be worth, that same bond, the rate changed from 3%, rates have changed from 3% to 2%, 2.5%, and I'm selling it to Luke, is that bond going to be worth $30,000? No. It's not even going to be close to that, right? Okay. It's probably going to be somewhere between 10 and 11 is my guess. If it came out to 11.1, I probably wouldn't be terribly surprised. It depends on how much term is left on it too. Okay. And so just keep that in the back of your mind, what should be kind of a rational answer, right? If it came in less, obviously, if it came in at $9,000 or $8,000, you scratch your head and go, that's not right. It should be higher, right? Okay. And if you get the wrong answer, then go back and take a look at it and fix it. It makes a big difference. So just to give you kind of an example, if you look, there is an introduction, and you may want to read through that because this is where your assignment's at. It's actually called the introduction for Project 2 under, I'll show you that, I'm sorry. Project 2, content. You come to business finance, content, come down to Project 2, you click on that, and you got introduction, okay? And I've downloaded that. There's also a little video there. You can sure watch that. It'll give you a little bit more. I've just added this site just just before class, because it's the one I've been going to more recently. You can see it says Morningstar.com too, and this says Morningstar, so I think they're sharing or using the same information. I've just found I've been using this one because I like the way the information is delivered a little bit better. Okay. If you open up the Word document, to get this one to follow the link, you got to hit Control, and then then it'll come up. So I'm going to click on that, bring it up. It brings me here. Okay, kind of looks like a page. What the heck, right? I'm not sure what's on there, but I want to look at a particular company. You guys should already know your ticker symbol, right? Okay. If not, go back and look at the assignment you submitted because you should know it. So I'm going to pick a company that nobody else picked. It's one I actually got a few shares in. CHD is the ticker symbol. It's called Church and Dwight. Funky name, right? You know what they make? This will really slay you. It's really important. Baking soda. Arm & Hammer baking soda. Okay, they make a lot of other consumer products actually too, toothpaste, deodorant, some of those things, probably dishwashing too, but laundry detergent. They also make Trojan condoms, so that was.
Or if it had something to do with military or World War II, I'm thinking Churchill and Dwight Eisenhower.
Yeah, I don't think that's where the name came from though. I think it was a couple, but anyhow, so. Your guys' assignment, if you read through this, if you come here, the bottom is your first assignment is to, and it's not your first, kind of your second, because you've already chosen the public company, right? Tell me what the company is. Find the ticker symbol of that company. You should have done that, right? For example, Microsoft's MSFT. Okay. Tell me the company's last closing price. This will obviously vary from day to day. The market has closed today, and so Church and Dwight's last closing price was $73.66. Okay, so if you get a number that's pretty close to what their current price is, I'm probably going to believe you, right? Because I know that day to day those things are going to change a little bit, so I understand that. Okay, you have to tell me the company's PE ratio. Anybody know what's PE stand for? Close. Price to earnings. Yep. The other E. So, there's a lot of stuff here, right? And I kind of cruise through it. Gosh, the high today was $74.70. The low today was $73.47. They sold 207 shares today. Previous close was $74.12. That's why we know it was down about that much, right? It opened 52-week highs about 81, 52-week low, la-da-da-da-da. Dividend yield, I'm not asking you guys for that, but it yields 1.23%. The pro yield, I think that means pro forma. By pro forma, it means looking forward. Okay, based on what we think the price might be going forward. I think that's what that means. Market cap, $18.31 billion, so relatively small. Remember, we looked up Amazon and Apple and Microsoft, and they're all about $1 trillion. So this is a tiny company compared to them, right? Average volume. Typically in a day they sell about 1.36 million shares. This is how many shares are currently outstanding. These can be important as we get into some of our future assignments. Oh, here, PE. Wow. Okay, PE. 27.62. Now, I've provided you with about a half a dozen sites that you could go to and look this up. If I went and looked them up today, we'd probably find a different PE at every site. Okay, so again, as long as your number's close, I'm probably not going to even check on you. Okay, I'll check because I check on everybody's, right? But if I look at a different site than what you've looked at and it's off by one, I'm not going to worry about it because they are different. What's the difference? Some of them are going to post when it says PE, it could be the trailing 12 months. Okay, so that could be based on the earnings for the last 12 months. Okay. It could be an annualized earnings based on year to date. It could be annualized earnings based on the last quarter. It could be a pro forma price to earnings, right? And so there could be way different ways that they actually express that price to earnings, okay? Take a look at it and see what yours is, because that's kind of cool to know, and it may help you understand some of this terminology when you start doing the project a little more. If you see a TTM behind it, that means trailing 12 months. Which means that this PE is based on our last 12 months worth of earnings, right? Okay. If you don't see that, it might say something like pro forma. You might see that. That's fine. Okay. It might say future. You know, there could be some different terminology that's in there. That's fine. Take a look and kind of understand, you know, what your particular one is saying. Okay, then lastly, tell me the company's previous year's earnings per share. This one should be a little bit more consistent, but it might not be. Again, you might have trailing 12 months versus, if I say previous year, if their year is a calendar year, then we'd go back to 2018, right? So December 31st of 2018 would be last year's earnings, right? Which would be the previous year's earnings per share. Okay. So you gotta kind of take a look at that. Either way, I'm not gonna mark you wrong on that either. If you give me the trailing 12 months, that's fine. That's basically the previous 12 months, right? Okay. Remember that a lot of corporations, their corporate year end can be different than a calendar year end. We looked at one, was it Friday or last week, and their calendar year end was here in September, right? Because I said, geez, they should be coming out with annual earnings here pretty quick, or their annual report here pretty quick. Okay, so their calendar year may be a little bit different. So when you look at it again, just try to understand what your company is, what their calendar year is, those types of things. Okay, in this case, I cruise along again. Where was I? PE, earnings per share, 240. Now I'm not 100% sure if they're got trailing 12 months or whatever. My guess is they went to when their last quarterly statement came out, and they used the 4 quarters prior to that. That's kind of my guess in this case. I could look that up by coming here to the financials. You guys are going to be doing plenty of that, and I don't want to get the full period used up doing that today, right? Because we'll be doing that in the future and taking a look at that. For now, it's good enough if you come here and that's the number that you give me, okay? Just to kind of get used to looking at some of this. Then I said I wanted to look at bonds maybe. I can come here to bond issues, and we see a few bond issues here, right? Again, this is just kind of more for the assignment, just to give you a look at it. I looked at this one, I think, before class. If I click on this, it tells me a little information. Oops. I got to agree the user agreement. So I got to agree to end user agreement or whatever. Okay. This particular bond, the coupon rate, or the rate that's on the bond when they originally issued it, was 3.15%, right? Okay. The last trade price was $104. A lot of times they'll express it like that, even though the bond itself might be $1,000 or $10,000. They do it in terms of $100 per $100. So the price of that bond went up, right? What happened to the yield? Yeah. Yeah, the yield's going to be less than the coupon rate then, and it tells us. Okay, so it wasn't a real trick question. You guys could have just glanced up and saw that, right? The yield is, 0.6% less based on that. This thing matures in 2027. These get, what's it mean callable? Anybody know? This one's kind of weird because the dates don't make any sense to me, but they'll, oftentimes company will issue bonds that will have call features in them, and that means that typically a company can't just call up, or just can't just call Luke and say, hey, you own that bond now, we want to redeem that. We're going to pay you the 10 grand and you know, the interest back to the last quarter, and you're done, we're going to pay you off. Okay. Normal bonds cannot do that, but bonds will have callable features. Okay. They might issue a 30-year bond, okay, and if rates, you know, if they issue that at 7%, rates go down to 3%, they'd like to pay Luke off, right, and refinance that. Okay, and so they'll put callable dates in the bond issue itself. They're oftentimes not months apart, they're years apart. You know, every 3rd year, every 4th year, every 5th year, or something like that, they may have a callable date. Okay, and so sometimes you'll see yield to call. You know, they'll be calculating that because that's the next time that the company could actually redeem that, right? You know, case like this, you know, this is callable. That's why this date's a little bit weird. It says next callable date 5/1 of 27. It matures 8/1 of 27. So it's a call date 3 months before the maturity date, according to this, unless this information's wrong. That just seems a little bit goofy. I cannot imagine them going through the process of calling it 3 months before it's actually due, but that's kind of an oddball thing. So, okay, everybody kind of got that? Okay. Good. Any questions about that? That's going to be the assignments due Friday, and you got Chapter 10 stuff due Friday, I think, as well. Okay. Any questions about either of those? I'll quit for the day then. You still got Project 1. Those have been dribbling in. I think I've had 5 people that have finished. A couple of those got to do a little bit of fixing for me, just minor fixes. If you got a grade, you're done. Congratulations. Okay. If not, then you either still got to submit it to me, or you got a couple little fixes to make or something. So. Okay, quiz for the day.